All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Wednesday, everybody. Today is May 14th, 2025. The top story this morning, there is a lot happening in the Middle East as it pertains to trade and even peace talks, believe it or not. We had a story a couple of days ago. It was one my moderator, Mish, found. It was a pretty obscure story that the PKK, this Kurdish faction in Turkey, was disbanding. And that was ending a 40-year conflict between the Kurds and the Turkish government. And I remember saying, wow, this is a really big deal. It's got to have something to do with Syria. Something big is coming out of Syria. We had the Assad regime fell down there. And well, we found out yesterday that it looks like some kind of a big deal has been cut between the U.S. and Syria and various factions across the Middle East, because President Trump, during his speech yesterday in Saudi Arabia, mentioned normalizing relations with Syria. There's all kind of articles today about how the Syrian government is encouraging American companies to invest. Now, look, Syria has been involved in a very long civil war. There's a lot that's going on there. It's not like all these problems have been solved in one day. There's still plenty of questions, a lot of different moving parts in Syria. I mean, it's like a Game of Thrones episode to try to figure out who's who and who's married who and who's fighting who and all these different pieces of the country. But look, things are improving there dramatically. We got more of that today. And as President Trump makes his tour across the Middle East, one of the big things that he's bringing with him, that he's offering, is this AI diffusion rule. And that's our title story today, that the United States has now officially scrapped the AI diffusion rule that President Biden put into place late last year. Now, AI diffusion created a three-tiered system for countries, and it allowed them to buy a certain degree of American chips. If you were a tier one country, you could buy unlimited chips, as many as you wanted. And those were basically just the United States and its European allies. Also Australia, Japan, some other countries like that. Tier two countries were only allowed to buy a certain number of chips, and most countries in the world fell into that tier two bracket. And then there was tier three countries like China, which was like, you can't have any. Now, I've done a lot of coverage on this channel about how American companies like Supermicro and NVIDIA are just totally disregarding export controls, violating them, sending their chips to Malaysia, billing them to Singapore to try to hide the fact that they're really selling these things to China. And the AI diffusion rule was one way that the Biden administration was going to crack down on this without actually cracking down on it, because for some reason, nobody will enforce the law when it comes to NVIDIA. I don't know why. They just refuse to do it. Probably because nobody wants this stock bubble to pop on their watch. But now that the AI diffusion rule is being scrapped, any hopes of enforcing those export controls are now out the door, because Malaysia and Singapore can continue unlimited buys of these GPUs. And of course, along with that, also Saudi Arabia, included yesterday. A lot of deals were announced between Saudi Arabian companies and American tech companies. And later this week, starting tomorrow, Trump will be in the United Arab Emirates. So we'll probably see more AI deals going on there. By the way, as he goes to the United Emirates and he starts talking about how all these chips we're going to sell and all these great deals that we're going to make, keep in mind, guys, that hyperscale Nexus story that I did about a year and a half ago now, they were centered in the UAE, and that company was created by a European drug cartel to launder money and smuggle chips into China using this Dubai company, Hyperscale Nexus, as a conduit. So keep that in mind as we're talking about these unlimited chip sales to the UAE. That is a possible flow path for these chips to wind up in China again. And by the way, I'm still waiting on my freaking Pulitzer Prize, because 3 days after I made that video, the name Hyperscale Nexus faded into obscurity. They canceled their merger and the company disappeared off the face of the earth, basically confirming exactly what I said it was. And well, nobody cared. To this day, I still can't believe nobody cared about that story, but I digress. So we got that one going on. And of course, NVIDIA stock is rallying. Supermicro stock is also rallying this morning, just about the worst company in the country. They were up double digits yesterday, double digits again this morning, because Supermicro was one of the worst offenders for those export control violations. They also cut a deal yesterday with the Saudi data firm Data Vault. They're going to build GPU clusters in Saudi Arabia. So, this is a big boom for semiconductor stocks, guys. It seems like the AI bubble has found their next source of liquidity, Middle East oil money. How about that? We also got a story yesterday from Microsoft. They laid off, or they are laying off 3% of their workforce. That's somewhere around 6,000 to 7,000 people were announced in job cuts yesterday from Microsoft. That's their biggest round of layoffs since January of 2023, when they laid off about 10,000. And we got a crazy story out of the ECB this morning. It's not getting a lot of attention. My moderator, Mish, found this one. Good find, Mish. The ECB is wargaming a possible scenario where their banks are under stress because of dollar funding shortage, and the Federal Reserve refuses to lend them dollars. Now, I just want to emphasize this is only a drill, right? You got the guy over the PA saying this is only a drill, right? This is not happening. The Fed has not suggested they won't send dollar funding to Europe if needed. The euro dollar system is not breaking down. But just the fact that the ECB is gaming this scenario is very interesting. Remember, President Trump has been very critical about the Federal Reserve. Jerome Powell's term is up in a couple of years here. Probably going to be his replacement, probably be replaced by Trump. Maybe Trump puts somebody in there who wants to drop the hammer on Europeans. And one way to do that is by threatening to cut off dollar funding from the Fed, which, of course, would leave their banks high and dry. You don't need to do a war game scenario to imagine that the European banks would be just absolutely hosed if that happened. But just the fact that they're drilling this now, that's a little bit concerning. We've also got a story about U.S. and Korean officials meeting recently, and they're talking about Forex in a context of trade negotiations. That's interesting because this is another story that leads me to think President Trump wants a weaker dollar in order to make U.S. exports more attractive and to make imports from other countries less attractive. Part of one of the ways he's trying to rebalance global trade. And, well, a weaker dollar would be a big step in that direction. And other countries are seeing this as a sign that maybe if we allow our currencies to strengthen against the dollar, that's one way to get President Trump to drop his tariffs. So we'll see if that spreads to other countries. We've also got some interesting data out of China this morning. First of all, new loans in China. This is Chinese government data, down 61% for the month of April. Credit is drying up in China big time. And again, if this is government data, whatever the Chinese are willing to admit, it's a good bet it's a lot worse than they're actually willing to admit. So while all the attention over the last few months was like, oh my God, the tariffs are crazy, American companies are going to go bankrupt, small business is going to get clobbered. And look, those were all perfectly legitimate arguments. But because American press hates Mr. Orange so bad, they totally ignored what was happening on the other side of the pond. A complete freezing of credit markets in China. And that's a debt-based system. They have a major real estate crisis going on in that country. They can't afford credit to dry up. So that goes to show you things in China were worse than they were letting on for the month of April. And there's another interesting story coming on. Stick around to the end here. China Vanke, one of the real estate developers that's been on the brink of insolvency for years now. Now, they made a last-minute payment on a dollar bond that was due Monday. Sounds like good news, right? You'd think, well, okay, great. They've made their dollar obligations. Then why did Fitch just downgrade Vanke to CCC ratings? That's one of the lowest ratings possible on Fitch. There's only 2 or 3 ratings even worse than that. They just made their payments and Fitch is downgrading. What the heck is going on at Vanke? Stick around to the end. It's kind of a crazy story what's going on there, and it does tie in with that 61% decline in credit. Once again, guys, there's a lot to talk about this morning. Why don't we shrink my big melon overhead and let's see what's going on in the markets today. Hey, don't forget that like button and that subscribe button for you new guys. Come on back tomorrow and have your coffee with the Melonheads because we do this one every single morning. Right now, the S&P 500 is positive after a couple days of ripping higher. Just barely positive, 10 points, 0.17% to the upside. But the buying continues here. The Dow is up by 47 points, 0.11%. The Dow got hit pretty hard yesterday by that absolute shellacking in United Health. Keep an eye on that company. I don't think we've heard the last of United Health for these next few weeks here. But for now, the selling in the Dow has subsided, and the NASDAQ is up 55 points or 0.25%. I'm actually kind of surprised the NASDAQ isn't doing better here, considering what we're seeing in some of these chip stocks. But we do have green pretty much across the board this morning. The U.S. dollar is a little bit weaker here, down 26 basis points to 100.71. That's off by about 0.25%, but still above that important 100 threshold. And looking over at the bond market, we've got very little movement in bonds this morning. The 30-year is higher by a fraction of a point, 4.945. The 10-year is unchanged at 4.499. The 2-year is down a fraction of a point at 4.015. And the 1 month is down a half a point at 4.315. Very little happening in bonds here, all quiet in the bond market. And then looking over at the commodities board, we got a lot of red here. Spot gold is down $73 this morning, 2.2%, below 3,200. So a little bit of a breakdown in gold here, although I would emphasize we're still over 3,100, which a few months ago would have been fantastic. But spot gold is at $3,176 here. Spot silver is taking it on the chin today, $32.17. That's off by 73 cents, or about 2.2% lower, but I still like that shiny. Copper, meanwhile, is down by about 1%. Platinum is down 0.6%. Palladium is one of the few that's green this morning, up about 0.25%. And West Texas Intermediate crude is at 63.19 for June futures. That's lower by about 48 cents or 0.75%. And then let's stop over at Bitcoin. It's currently down about $90 at $104,040 this morning, kind of in this range we've been trading in for the last couple of days here. We've kind of been bouncing around between 102 and 104 for about a week. My guess is Bitcoin is getting ready to break out here and possibly make new highs. We'll see what happens over there. But let's talk about the big one this morning. This is in the Wall Street Journal here. The U.S. scraps the AI diffusion rule in revamp of Biden-era chip curbs. Tech companies, including Microsoft and Oracle, had spoken out against the rule. U.S. has revamped Biden-era rules on artificial intelligence chips, scrapping a measure that had been unpopular with technology firms like NVIDIA, which welcomed the move. The Department of Commerce said in a statement Tuesday that it is rescinding the AI diffusion rule on the grounds that it would have stifled American innovation, saddled companies with onerous regulations, and undermined diplomatic relations with dozens of countries. NVIDIA said that it welcomed the Trump administration's leadership and new direction on AI policy. With the AI diffusion rule revoked, America will have a once-in-a-generation opportunity to lead the next industrial revolution and create high-paying U.S. jobs, build new U.S.-supplied infrastructure, and alleviate the trade deficit, a company spokesperson told the Wall Street Journal on Wednesday. Yeah, it's also going to help you sell even more chips to China while pretending like you have no idea it's going on. And then China will use those chips to build better missiles and better target our carriers and probably conquer Taiwan. Hey, what's the worst thing that could happen? Don't answer that. Focus will now be on how the Trump administration refashions the diffusion rule, which could take a couple of months, Wall Street Journal reported this month. Policymakers are weighing how to block adversaries such as China from accessing advanced chips without hurting U.S. companies. The change is a big win for countries previously limited from buying U.S. chips, notably Saudi Arabia, the United Arab Emirates, Singapore, Israel, Morningstar analyst Felix Lee said. And look, guys, I would just remind you, I did this video a couple of months ago about just the obscene violation of export controls. Before the AI diffusion rule, it's already been illegal to sell these GPUs to the Chinese. And NVIDIA and companies like Supermicro have been violating that rule on an absolutely industrial scale. I mean, I showed clips in this video of guys in China holding up their H100 GPUs saying, look at my illegal NVIDIA H100 GPU. It's illegal for me to buy it, but I just got a few hundred of these things delivered. I showed video of entire warehouses full of crates with Supermicro servers inside them. I showed you clips of these things that the Chinese market was so oversupplied with H100s that they were actually selling these things on madeinchina.com, on Alibaba, and even freaking Facebook Marketplace. And so now the U.S. is actually easing those export controls. Look, this coincides with all of this sudden surge in sales to Singapore that my friend Kakashi on X has done such a good job covering. That's just going to continue here. The Chinese are going to keep buying this stuff is what's going to happen. I mean, the Trump administration is saying we don't even have a plan to replace the AI diffusion rule. And on a second side note, I have to ask, does it even matter what the rule is if companies like Supermicro and NVIDIA are already allowed to violate the rule whenever they want without consequence? Then it's not really a rule at all, is it? So what's the point of coming out with new rules if you're still not even enforcing the old ones? Either way, this is a boon to NVIDIA, guys. It was up 5.6% yesterday. It's up another 3% pre-market this morning, $133.76. That stock is ripping. Another stock that's ripping is Super Microcomputer, just about the worst, most corrupt, crooked company in the world. Saudi data firm DataVault signs $20 billion deal with Super Micro. DataVault, a data center operator based in Saudi Arabia, has entered into a multi-year partnership with Super Microcomputer, a U.S.-based company. This agreement aims to enhance DataVault's hyperscale AI campuses in both Saudi Arabia and the United States by providing advanced GPU platforms and rack systems. The collaboration is valued at $20 billion and focuses on delivering scalable and energy-efficient AI infrastructure. As part of the partnership, Supermicro will supply U.S.-manufactured GPU systems. And look, I expect we're probably going to get similar deals like this announced in the United Arab Emirates in the coming days. So Supermicro is cashing in. Look, this stock was up 16% yesterday. It's up another 15% today. And once again, it's obvious that this is all about the AI diffusion rule because, again, all of those videos I showed in this video, they were Supermicro servers that were being sent by the freaking boatload into China. And now that we're scrapping those AI diffusion rules, it's going to get even easier for them to do it. So it's no mystery why Supermicro's up double digits 2 days in a row here, because they're just going to keep doing it. Also going on this morning, Microsoft laying off about 6,000 people, or 3% of its workforce. This story broke late yesterday. Microsoft on Tuesday said it's laying off 3% of employees across all levels, teams, and geographies, affecting about 6,000 people. We continue to implement organizational changes necessary to best position the company for success in a dynamic marketplace. That's according to a company spokesperson. Says, yeah, we're firing people so we can make more money. It's amazing how positive they make that sound. In total, it's likely Microsoft's largest round of layoffs since the elimination of 10,000 roles in 2023. In January, the company announced a small round of layoffs that were performance-based. These new job cuts are not related to performance, the spokesperson said. So, it doesn't matter how good you are at your job. The company needs to free up some capital so they can keep burning $80 billion a year in CapEx on data centers that will never make the company any profits. So we're just going to have to eliminate your role to allow that bubble to stay inflated just a little bit longer. Microsoft stock is actually a little bit lower this morning, down 0.5% here, $447.17. That's off by almost $2. Shifting gears over to Europe now. This is a pretty crazy story here. I just want to emphasize, guys, that this is only a drill they're talking about. They're only gaming out this scenario. So it's no reason to be too alarmed right now. There's no imminent bank collapse or anything like that. But it is a pretty crazy scenario that they're gaming here. ECB supervisors press banks on dollar funding over Trump concerns, sources say. European central bank supervisors are asking some of the region's lenders to assess their need for U.S. dollars in times of stress as they game out scenarios in which they cannot rely on tapping the Federal Reserve under the Trump administration. 3 people with knowledge of the discussion said. Nearly 1/5 of Eurozone banks' funding needs are denominated in U.S. dollars, with the lenders borrowing in markets for short-term funding that can shut down abruptly in times of financial stress. In the past, European central banks borrowed dollars from the Fed, the source of the currency, to make up for the shortfall. Now, 2 of the sources familiar with the ECB supervisory discussion said the Fed has never suggested, including now, that it would not stand by those backstops. Even so, with President Trump's questioning of long-held defense and trade agreements with European allies breeding mistrust, there are concerns the Fed's position could change, said the sources, who requested anonymity to speak candidly about sensitive banking supervisory matters. And look, guys, if this is only a drill, all right? I just want to emphasize this isn't actually happening here. But just the fact that they're gaming this out is pretty significant. If the U.S. were to ever do this, this would be an economic nuke of Europe. If the Federal Reserve, like during COVID, the Federal Reserve just printed dollars out of thin air. They call them Forex swaps, all right? These swap lines, it's basically money printing. They just injected trillions, hundreds of billions, whatever the actual number was, of dollars into the European banking system to shore up their banks. when everything went to hell in a handbasket during COVID. So the scenario they're playing out here is some kind of economic crisis where the Fed says, no, we're not going to debase our own currency in order to bail out your banks. You're on your own. And look, you don't need to be a banking executive or an expert on swap markets to understand European banks would be just totally screwed in that scenario. And I guess they're running this war game to figure out just how screwed they actually would be. But again, this is only a drill. Meanwhile, we've got U.S. currency talks fuel bets that Trump is open to a weaker dollar. This one going on this morning here. Again, there's been a lot of talk about how Trump will never admit to this because it's bad politics to go on TV and say, I want my currency to be weaker. But if you really do want to reshore manufacturing and balance out trade, then a weaker currency is a way to get you there. And it seems like that's exactly what they're talking about with the Koreans here. The dollar fell after a person familiar with the matter said the U.S. and South Korean governments discussed currency policies this month, fanning speculation President Donald Trump's administration is open to a weaker greenback and will make exchange rates a feature of upcoming trade talks. The won gained the most against the dollar after the person said South Korea's Deputy Finance Minister Choi Ji-young and Robert Kaproth, the U.S. Treasury's Assistant Secretary for International Finance, had talked about currency policies at a May 5th meeting in Milan and will continue to do so. The person asked not to be named as they weren't authorized to speak publicly. The won jumped more than 1%, and neighboring currencies, including the Japanese yen, also rose as investors took news of the talks as further reason to suspect the Trump administration wants the dollar to decline and that foreign governments may accept strength in their exchange rates to smooth the way to trade deals with the U.S. And that's kind of the takeaway from this one here. Foreign governments may accept strength in their exchange rate to smooth the way to trade deals with the U.S. These tariffs created chaos in global trade. President Trump is offering them a way out of the chaos of saying, let your currency strengthen against the dollar so that my exports become more attractive in the global market. And then maybe these tariffs will go away. And so the fact that they're talking about it with Korea means this is on the table in Japan. This is on the table in Taiwan. And look, we saw all these Asian countries last week and 2 weeks ago, right, during this time frame while this meeting was going on in Korea, we saw that inexplicable strengthening in the Taiwanese currency, and all these Southeast Asian currencies all strengthened dramatically against the dollar. Well, maybe this is why that was happening. They got wind of this meeting before anybody else did. Also going on this morning, we've got a credit breakdown in China. This is pretty crazy here. No wonder they were so willing to talk all of a sudden, even though they kept pounding their chest and, projecting strength in the media. China's new loans plunged 61% as trade war with U.S. intensified. That's a 61%. That's not a decline, guys. They were more than cut in half. That's a credit crisis. China's new loans slumped sharply as credit expanded at a slower pace than expected in April, as escalating trade tensions with the U.S. harmed sentiment. Financial institutions offered just 285 billion yuan, or $40 billion, of new loans last month, a drop of 61% from a year earlier to the lowest level since July, according to Bloomberg. That's based on calculations from data from the People's Bank of China. Again, Chinese government data, that's kind of crazy that Chinese government data will admit it got this bad, which means it's probably a whole hell of a lot worse than they're willing to admit. The median forecast for economists surveyed by Bloomberg was for 700 billion yuan. So look, this was less than half of what they were expecting. They got 285. They were expecting 700. Aggregate financing, a broad measure of credit, increased 1.2 trillion yuan in April, also worse than the 1.4 trillion yuan that was estimated by economists. The willingness of companies in China to expand investment deteriorated sharply, with corporate mid and long-range loans plunging almost 40% to 250 billion yuan in April from a year ago. Both household and corporate loans were pretty weak, said Michelle Lam, Greater China economist at Societe Generale. It is quite possible that U.S. tariffs have weighed on private sector sentiment. It's quite possible U.S. tariffs weighed on private sector sentiment. Thank you so much. I'm so glad you're here to tell us these things. Next thing, you're going to be telling us that this asteroid is not entirely stable. Chewy, take the professor in the back and plug her into the hyperdrive. Of course, the tariff war soured sentiment. Nobody wants to lend because nobody knows who's still going to be in business a few months from now because of 145% tariffs. So this just goes to show you the pain on the other side of the bond other side of the pond. It was really severe. You didn't get any talk about that in Western press because they only wanted to talk about Orange Man bad. But China was in really dire straits up to a point here. And look, so were we. Everybody was. And by the way, welcome to the members of the Chinese 50 Cent Army. I just love your comments. Thank you for the engagement. You adorable little creatures, you. And, well, yeah, thanks for the engagement. Another Chinese story going on this morning. This one was kind of interesting. The Chinese housing collapse. We haven't talked about that in a while, but it's still out there, guys. And China Vanke has been one of the companies at the center of this. Chinese builder Vanke repays its only dollar bond due this year. All right, this sounds like great news. Let's all stop reading here and just sing Kumbaya. But you know what? We just have to keep reading. We can't help ourselves here. And when you keep reading, you realize, oh, this story, not so great. China Vanke has wired funds to repay a dollar bond due on Monday, according to people familiar with the matter, clearing its only such obligation of the year after a government-led overhaul of the developer. That's your first hint right there, a government-led overhaul. Two holders have received principal and interest payments on a 3.15% dollar bond issued by Vanke's offshore subsidiary that matured on May 12th with $423 million outstanding, said the people who asked not to be identified. Vanke didn't immediately comment. The repayment signals that Vanke has managed to ease liquidity risks after the government in its hometown of Shenzhen stepped in to take control of operations in late January. As part of the revamp, China's Vanke's two top executives stepped down and an official from Shenzhen Metro Group, that's the Shenzhen Local Government Development Group, their largest state shareholder, took over as chair. And we're going to read on a little bit here. The repayment comes after Shenzhen Metro said last month that it planned to lend 3.3 billion yuan or $457 million. That's almost exactly the amount that was due on this bond to help it repay principal and interest on publicly issued bonds. So why is this such bad news? The only reason Vanke made this payment is because the government took over the company and then gave them the money to make the payment. In other words, China Vanke just got nationalized. That's what happened. And this is why this is such a big deal here. The only way these developers are going to survive is if the government takes them over and then gives them the money to pay their debts. So ultimately, what's going to happen is the government is going to end up owning all these empty cities with nobody renting these buildings. What the hell are they going to do with them? Well, that means Zerpenberg, guys. That means their only choice is going to be to monetize the debt that created all these buildings in the first place. And it looks like Fitch has caught wind of this one because Fitch just downgraded China Vanke to CCC+ and Vanke Hong Kong to CCC. This is among their lowest ratings here. The downgrade was driven by China Vanke's first quarter 25 sales and cash flow generation that were weaker than expected, leading to a further reduction in its liquidity buffer against significant capital market debt maturities this year. The company has repaid its capital market debt year to date, aided by shareholder loans from Shenzhen Metro Group, its largest shareholder. It's also the local government. Fitch believes ongoing and timely liquidity support from Shenzhen Metro Group may be essential to address China Vanke's near-term financing requirement and support its ratings, considering the uncertainty surrounding the company's cash flow. In other words, this company has now been nationalized, and without further cash infusions from the government, this company won't be able to pay their debts. And that's why they're getting downgraded. The Chinese government just has to take over all these developers. It's the only way they're going to make it. And, well, there's a lot of developers in similar situations to China Vanke. And by the way, we still haven't gotten the liquidation of Evergrande's assets. That is still being pushed around in court. The same thing with Country Garden. All these high-profile bankruptcies, all these companies that stopped paying their debts years ago, they still haven't paid anything. And yet all these Chinese banks and investors and institutions are still holding these buildings on their books, valued at 2021 valuations. And they're playing the same game we are here in Wall Street. The floor is price discovery. Whatever we do, just don't let the world figure out that this stuff really isn't worth spit. Just keep moving the shell game around. And it looks like government nationalization, that is the newest version of the floor is price discovery. And I just want to say thank you so much to Hunt and Cover. I'm running on empty, Jack, taking profits next week. Well, first of all, congratulations on your profits if you have profits to take. And as far as running on empty, look, the market isn't running on empty. The market's been empty for a while. The money is running on hopium, hypium, and the floor is price discovery, the avoidance of price discovery. The only reason this market has not sold off dramatically is because, like the same thing they're doing in China, everybody is just pretending their stuff, what they're holding is worth something. Private equity, private credit, auto loans, mortgage-backed securities, FHA loan workouts, every corner of finance. And I've been having these conversations with folks like Lux Ganapathy recently and Melody Wright. No matter where you look in the financial system, everybody is just doing everything they can to avoid finding out what they're holding is really worth. That's happening everywhere. So, yeah, stocks are going up, even though things on Main Street just keep getting worse and worse. Well, that's why. It's just all one big shell game, a game of pretend. So I think you're smart to take profits. I think this market is getting way ahead of itself, way, way ahead of itself. Everybody's like, all right, 30% tariffs, celebrate. Market heading upward and onward and upward to new highs. A few months ago, 30% tariffs would have been considered clinically insane. And yet we're all celebrating it. Why? Because, well, it could be worse. It could be 145%. Doesn't change the reality that a lot of companies out there can't afford those 30% tariffs, which are probably going to go higher from here, not lower. And, well, those companies were already in bad situations before the tariffs even got here. And the people that own these companies have been creating all these cockamamie funding concepts in order to put those holdings in there, sell them to pensions mostly before the prices reset. Yeah, smart to take profits, hunt and cover. Thank you for supporting the channel, sir. And thank you to Richard Bell, who says, who will pay the tax cut now? Jet gift logo / bribe. All right, who will pay the tax cut now? Let me just, first of all, comment that the phrase unfunded tax cut always drives me nuts, because when you call a tax cut unfunded, it's beginning from the premise that that money belonged to the government to begin with. And I just don't like beginning with that assumption. Who will pay for the tax cuts? How about we cut spending? Whoa, crazy. I just throw it out there. I realize a slew of federal judges probably with funny hair all basically said it's illegal to cut spending. And I realize that, you know, we have this 500 member body or 400 and whatever, however many Congress people there are, maybe, yeah, it's probably a little over 500, maybe 6 if you count the Senate. I realize they're all worthless and they're sure as hell not going to cut spending. But the easiest way to pay for tax cuts is to stop spending money on stupid crap we don't need. I just throw it out there. I mean, there's that. Second of all, there's one thing that I have not heard about recently, and that is carried interest. There was hope that carried interest might be included in this tax reform. Carried interest, in my opinion, is one of the reasons why private equity firms are able to just move into a town, take over every business, hospital, whatever, loot it, bleed it dry, pay themselves big dividends, and then declare bankruptcy and move on to the next town like freaking locusts. I think carried interest is one of the tax loopholes that allows private equity to do this. And the easiest way to pay for any tax cut is to get rid of that and to make those freaking scumbags like Ralph De La Torre at Stewart Healthcare, make them start paying taxes on their income at income tax rates instead of capital gains rates. That would level the playing field between small business and private equity. That's not on the table, though. That's an easy way to do this. Both parties always talk a big game about this, and then none of them ever do because they all want the campaign cash that private equity gives them. So that's how you pay for it, to be honest with you. But that, again, cutting spending is the easiest way to do it. But look, the more things change, the more they stay the same, Richard Bell. So I'm not holding my breath on that one. Also, SALT cap deductions. There's a lot going on in the tax code right now. I'm not paying very close attention to it because Congress is still negotiating, and they always change the bill at the last minute anyway. But it's a good bet. Whatever they do, it's going to suck for us. It's going to be good for they, bad for us. That's just empirical data suggests that's how it's going to be. Thank you, Richard, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate the super chats, guys, as well as you, my magnanimous Melonheads on YouTube and Patreon. You guys rock. Thank you so much for everything you do for the channel. I got links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm. Hi, Mom. Hi, Dad. Love you guys. And everybody, until next time, live small and dream big.